Hi everyone, I'm Corrina Sullivan. You may know me from Newsmax, Fox, and CBS broadcasts from across the country. I've covered stories on everything from micro-cap tech companies taking on Apple to the coronavirus response in a joint report with Bill O'Reilly. Well, today, I'm coming to you live with a special broadcast from New York City. We're just steps away from the New York Stock Exchange, where last year, more than 480 companies debuted as new stocks. That's close to 2 new initial public offerings per trading day. It was IPO mania, and the gains were spectacular. Altogether, these companies went up an average of 75%. That is 5 times better than the return of the S&P 500. But while these companies made investors incredible returns, investors who got in pre-IPO saw even bigger gains. In 2020, pre-IPO investors in Asana saw an 816% return versus just 35% for regular IPO investors. Pre-IPO investors in Airbnb made a 1,700% return versus just 112% for regular IPO investors. And Snowflake pre-IPO investors banked a 2,650% return versus just 111% for regular IPO investors. It is clear it pays to get in before a company goes public, when the best companies go from small bootstrap operations to being worth billions of dollars. There was just one massive problem if you wanted to get in these trades. You had to be an accredited investor and meet some very steep requirements, such as having $1 million in assets. Well, listen up. It's not the case anymore. Thanks to a backdoor investment, many opportunities in the pre-IPO market are now accessible to anyone. Now, let me be clear. I'm not talking about equity crowdfunding or private placements. And I'm not talking about becoming an angel investor, investing in early rounds on risky new businesses. Rather, there is a different way, an easier way to get in on some of the biggest pre-IPO gains. The Wall Street Journal calls it the hottest thing in finance. Kevin Hartz, an early investor in Airbnb, Uber, and Pinterest, says this is a revolution. This savvy billionaire, guess what? He's not exaggerating. In the past 12 months, we have seen more of these special pre-IPO opportunities than we had in the previous 10 years combined. Joining me today to peel back the curtain on this little-known corner of the market is one of the country's leading pre-IPO experts, Andy Snyder. In the next few minutes, he's going to reveal why anyone can now get into some of the most exciting pre-IPO opportunities. We will show you how to invest in the market's hottest companies before they go public for as little as this, $10, just $10. You'll discover why you do not need to be an accredited investor to access these deals, and why in January 2021, every single one of these pre-IPO opportunities went up in the first day of trading. Seriously, every single one. Now, this is your chance to get in early before a company goes public for a shot at the market's biggest gains. So let's get right into it. Andy, welcome.
Thank you, Corrina. I'm happy to be here. This is a huge development in the pre-IPO market, and I couldn't be more excited. We're talking about the chance to get in early on the next potential breakout stock with as little as $10. It's probably the single best shot everyday Americans have to achieve extraordinary wealth in this market.
Well, that is a bold claim, and I would expect nothing less from you, Andy. But people at home, they might be wondering how you can be so sure. In fact, I'll admit it, as an investigative journalist, I am too. But you are convinced, right, that this type of pre-IPO opportunity is right for that many people?
Corrina, a few years ago, when you needed millions to get into pre-IPOs, I'd have said no way. But now, with the back door I'm going to talk about today, anybody can get into the hottest pre-IPO opportunities, usually for around just $10. Today, I'll explain how this back door works so our audience can decide for themselves whether it's right for them. I'll give everyone watching details of my #1 pre-IPO investment for 2021. And I'll also share the details behind 3 more little-known pre-IPO opportunities. Each of these companies plays a key role in developing new technologies that are changing our world.
Well, that sounds great. But before we go any further, Can you explain what exactly a pre-IPO investment is for us?
Sure, that's a good question, Corrina. Simply put, a pre-IPO investment is when you buy shares of a private company before it goes public, meaning before it starts trading on exchanges like the NYSE or the NASDAQ.
Now, Andy, normally it's very difficult for most investors to invest in these private shares, right?
Difficult is an understatement. For starters, you cannot access traditional pre-IPO investing on your E-Trade account or whatever platform you use. There are also usually investment minimums. Plus, as mentioned earlier, you may need to have a net worth of more than $1 million. Most Americans do not have $1 million just lying around. But of course, this gives high net worth clients and big name venture capitalists free rein. USA Today reports that the lion's share of the easy money is made by insiders and early investors. These guys aren't looking to share their profits with Joe Main Street, putting in his $1,000. So they love that $1 million requirement, which keeps the little guy out. They want to keep the gains for themselves, and they can be substantial, like 2,614% on DoorDash in 2 years, 2,775% on Snapchat in 4 years, 4,900% on Facebook in 6 years. It's an outdated system designed to favor the ultra-rich versus the little guy.
And to be honest with you, that's why I was just so intrigued to break your story and to get it out there to the public.
Right. Today I'll show you a new way of pre-IPO investing that is far better than the old closed-door way. First, because the minimum investment can be as little as $10, and second, because you can use your regular brokerage account. This particular type of pre-IPO investment can be bought in the same place you trade or buy stocks, bonds, or options. Bloomberg reports that it has been close to impossible for regular people to buy shares at IPO pricing. Now that is changing.
So what is this better way to go public?
Sure, it's an innovative financial breakthrough called a special purpose acquisition company, or Spac for short.
I've seen a ton of coverage on SPACs from fellow journalists in the news. The Financial Times writes, Wall Street has largely embraced the structure as an alternative way for companies to go public. According to Morningstar, it's a backdoor way for private companies to be able to go public without going through that typical IPO process. And The Economist says SPACs are a Silicon Valley rebellion against the cost and rigidity of IPOs. But until 2020, I had never heard of a SPAC IPO. Can you explain exactly what it is?
A Spac is essentially a publicly listed holding company that's sole goal is to pinpoint the next innovative private company looking to go public and merge with it. Here's how a Spac works. Investors pool their money into a publicly traded shell company. The public shell company is called a Spac. This is the special purpose acquisition company. These investors are called sponsors, and they're usually high-profile entrepreneurs like billionaire Richard Branson or hedge fund manager Bill Ackman. These sponsors use their years of expertise and networks to find an innovative private company to merge with the Spac, usually within 24 months or so. Then, after the merger, the Spac takes the name of the private company and begins trading as a single public company under a new ticker symbol. This is essentially a way to go public in a fraction of the time and with a fraction of the resources of a traditional IPO. Now, here's why this matters for regular people. Anyone can participate in these pre-IPO deals for as little as $10 a share.
So what changed in the market that caused SPACs to become so popular?
This occurred only in the last 36 months. It was a massive change. Essentially, companies figured out that the regular way to IPO was a fool's errand. The government's rules surrounding going public had become so burdensome, costly, and complex that companies actually decided to stop going public. Forbes reports that companies don't want to deal with the hassles of going public because of the increased regulations required of publicly traded companies. Listen to this statement from Roloff Botha, a partner at Sequoia Capital, a venture capital firm that invested in Google, Facebook, and PayPal when they were startups. He says the regular IPO process is chicanery and grand larceny, and that IPOs are as expensive and inefficient as ever. CNBC's Jim Cramer says the traditional IPO system is broken and embarrassing. You see, in the past, startups like Microsoft went public early in their life cycles. When it first started trading, Microsoft was only a $777 million company. Uber, by comparison, was worth $75.5 billion when it went public. Its biggest growth was already behind it.
So why did Uber wait so much longer than Microsoft to go public?
Back in the 80s, it didn't cost as much to IPO, and it was an easy way to raise cash for a young company. But that changed in the early 2000s when massive investment banks like Goldman Sachs and Morgan Stanley took over the IPO process. And here's what happened. Let's say you're the founder of a tech startup. You've got a great product, growing sales, and a bright future, but you're running low on cash. So you decide to go public and raise cash to grow your company. You go through a bank like Goldman Sachs to get it done. That bank would start the traditional IPO process. It would go on what's called a roadshow, where its bankers would try to get investors interested. It would negotiate with multiple Wall Street firms, which would try to undercut your valuation so that they could get a bigger share. This process can take years, and you have no clue what your final valuation will be until pretty close to the date of the actual IPO. At that point, the Wall Street banks decide where to set the price, knowing they can skim a ton of profits right off the top. In short, they give themselves the best prices, overcharge investors, and then pocket the extra fees. In some cases, an entire year's worth of profits for the company that's going public would end up in the hands of the investment banks. The company Market, for example, went public in 2014. It ended up costing Market $220 million to do so. And the entire operating profits of the company were just $230 million. With costs like that, companies began staying private far longer because they simply couldn't pay the steep fees charged by the banks. And by the time these companies were profitable enough to go public, Wall Street sold them to Main Street at a massive premium. The market finally began to wake up to this scam with Uber's IPO in 2019. The investment banks that took Uber public went on a roadshow hyping the company. It was lauded as the biggest IPO since Facebook. CNET said it would be one of the largest tech IPOs ever. Morgan Stanley's Michael Grimes, the company's head of global technology investment banking, even moonlighted as an Uber driver in a publicity stunt. Yet it was a disaster for investors who bought after the IPO. Uber started trading publicly at a price of $45. Then it fell to a low of $25, an abysmal 45% loss. Vanity Fair put it best. Morgan Stanley and other underwriters created an overhyped disaster, and investors lost $655 million at the end of the first trading day. But here's the rub. Morgan Stanley and the other big banks profited $106 million in fees. So Wall Street wins big, and so do the early pre-IPO investors who made billions on Uber. And who loses? The retail investors, everyday Americans who bought in after the IPO, of course.
So Wall Street gets richer, right? While Main Street loses and the wheel just keeps on turning.
Exactly, until one of the world's smartest and most controversial businessmen decided to break that cycle.
Who's that?
Sir Richard Branson, the founder of Virgin Group. I've written about him a lot. As Uber tumbled, his company, Virgin Galactic, was one of the first big names to go public as a Spac. Now, Branson's Virgin Group has 49 companies under its umbrella. Branson himself has overseen 500 companies and is worth a cool $4.4 billion. So he could have easily taken Virgin Galactic public the regular way, like Uber. But Branson, being the rebel that he is, said he wanted to give regular people the chance to invest in his company. Branson said, "This is the sort of thing the public should be investing in, a new, exciting startup. It's exactly what the public markets are for." His management team was all on board. In an interview with Fortune magazine, Virgin Galactic CEO George Whiteside said that going public through a Spac would simply be a better business decision. He said it required less bandwidth and less time. And the chairman of Virgin Galactic agreed, telling CNBC that the Spac IPO avoided traditional processes that eliminated management distraction. And now we're set up to just run the business. So this entire process for us from start to finish took 3.5 months. All in all, it was a win-win for the company, which avoided big fees and saved time.
Right. You're talking about money that could have been spent on paying down debt or expanding the business. So you don't need to be a genius CEO to realize a cheaper IPO is a better IPO.
Correct. And another huge benefit to this new type of IPO is speed. Going public through a Spac cuts the time it takes to go public down to as little as 3 months. A traditional IPO can take as long as 18 months. Forbes launched an investigation into why these deals are exploding. And one CEO they interviewed said that going public through a Spac is all about speed, speed, speed. Time is money on Wall Street. So they can speed up the process to months versus years. You better believe they will do it.
Okay, so this is good for the companies going public, but is it also good for Main Street investors?
Absolutely. It's good for both parties because regular investors get a rare chance to get into a private company early when its biggest growth is still ahead of it. Richard Branson's Spac is the perfect example. The Spac came available at just around $10, but in 1 year, it went up to as high as $60. Investors in Virgin Galactic banked a 400% gain thanks to Branson's Spac strategy. CNN reported that the Virgin Galactic IPO ended up validating the Spac process and proving that investors are hungry for some new companies. And that puts it mildly. I believe the success of Virgin Galactic's Spac fundamentally changed the IPO market. And it started the Spac revolution in 2020. As Jack Albin, the chief investment officer of $12 billion investment fund Crescent Capital says, it's an easier and often cheaper way for private firms to go public. After Virgin Galactic went public and proved startups could bypass the Wall Street machine, the number of Spac deals took off. In 2019, 59 private companies went public through a Spac. In 2020, SPACs exceeded traditional IPOs for the first time ever, with 242 companies going public through a SPAC. And like Virgin Galactic, we saw success after success for SPACs throughout the market. We saw the Adapt Health SPAC rise 295% in 15 months. MP Materials soared 362% in 10 months. And ChargePoint jumped 315% in 6 months. For investors, there are hundreds of opportunities like these coming in the next few months, and there's big money on the table.
Right. Goldman Sachs predicted that SPACs will drive $300 billion in merger and acquisition activity over the next 2 years after just a monstrous 2020.
It might be even more than that. In February 2021 alone, SPACs raised $32 billion in IPO capital, making it the largest issuance month on record. By March, the amount of capital raised in 2021 exceeded the amount raised in all of 2020. Stacey Cunningham, the president of the New York Stock Exchange, says we're entering a renaissance in the IPO market. The Wall Street Journal says increasingly it is the favorite source of financing for private companies looking to go public. In 2021, there are 2 new SPACs launching every single day. At that rate, we could hit at least 700 SPACs this year. That's 700 chances for regular investors to see returns that were once only available to venture capitalists. Chin Chu, the founder of private equity firm CC Capital, broke it down perfectly for Bloomberg News. When you compare it to an IPO, the pitch is actually very simple. It is a better way to go public. And this translates into a big opportunity for regular investors. Like Opendoor, which jumped 216% in 9 months. Immunivant, which went up 389% in 12 months. Nikola, which went up 668% in 6 months. Danimer Scientific, which went up 395% in 3 months. And QuantumScape, which went up 1,150% in 5 months. To be clear, these are some of the top examples I found looking back at the market. Nothing is guaranteed in investing. But you do not need a special account to access SPACs just like these. You can buy them in your regular brokerage account.
Right, you mentioned that buying these SPACs is as simple as buying a stock. Can you walk us through that process and how it works?
Sure, absolutely. Let's take a look at one of the most popular recent SPACs. This one is DraftKings. It's the biggest player in the online sports betting industry. It's partnered with the leading names in sports like Major League Baseball, ESPN, and Fox. And Mark Cuban and Michael Jordan are investors. Now, Michael Jordan has a net worth somewhere north of $1.6 billion. And entrepreneur and investor Mark Cuban is worth more than $4 billion. They're pretty much the ultimate backers you could ask for.
So yes, this is a great company to own.
Absolutely. You could have bought the DraftKings Spac before it went public in December 2019. All you had to do was enter the Spac ticker symbol. It traded for just $10 a share then. So for $5,000, you could have bought 500 shares. And that's all you had to do. 9 months later, DraftKings traded for around $60. So that $5,000 investment would have been worth $30,000. And you could have simply sold your shares to bank a 500% windfall.
Sounds simple enough, but 500% in 9 months. Andy, normally such high returns come with much more risk. So I'm just going to put it bluntly here, okay? Because our viewers, they have the right to know. Are SPACs risky investments?
Sure, Corrina, I'll answer that in 2 parts. First, all investments have risk. It's just part of the game. So you should never, ever invest more than you can afford to lose. That's just common sense. And just because SPACs were great last year doesn't mean they always will be. It still is very important to invest in the best companies, not just in any companies. But now, to my second point, SPACs do in fact have far less risk than regular pre-IPO investments, and in many cases, less risk than stocks in general.
So why is that?
After a SPAC is launched, it generally has 2 years to take a company public by merging with it. If you don't like the company the SPAC chooses to take public, or if the deals fall through, you can opt out and get back your $10. Michael Ulreg, a professor of law at New York University, says it's a free lunch. There's no way around it. Forbes calls it a no-lose trade. Now, if you purchase the SPAC on the market for more than $10, that additional money would still be at risk. And once the merger happens, your total investment will have the same risk as any other stock. But that's okay. Our strategy is to purchase SPACs planning to merge with companies you want to be invested in. The option to get your $10 back before the merger happens is an added benefit. What's more, with SPACs, you can sell your shares whenever you want. So there's no holding period and no lockup. As Bloomberg reports, investors see SPACs as low risk with the potential of big upside. And University of Florida finance professor Jay Ritter did a study on SPACs in January 2021, discovering that every single one of them had gone up that month. So it's an easy decision to invest in SPACs because you only need a small amount of money. If the SPAC doesn't go public, you get your $10 back. SPAC pre-IPO profits come in a fraction of the time of regular pre-IPO profits, and you can do it over and over and over again.
Okay, Andy, I think it's incredible, actually, that ordinary investors now have an easy way to profit from private companies with less risk than many pre-IPO investments. So let's get down to the details now. Can you tell us what you look for in the actual company that you're targeting through a SPAC?
I'm happy to, Corrina. There are 3 main boxes that I like to check. First, I want to see quality backers in management. Second, I want the company to be set up for big growth in a huge market. And third, I want to see that the company is a first mover in its market. Take Luminar Technologies, for example. Looking back, it met every one of my requirements for a SPAC. First, the company was backed by one of the most successful investors of all time, tech billionaire Peter Thiel, who founded both PayPal and Palantir. Second, the company addressed one of the biggest potential markets, driverless vehicles. The autonomous vehicle market was valued at $54 billion in 2019 and is now estimated to grow to $1.6 trillion by 2030. And third, even better, the company was a first mover with a technology that solved one of the biggest problems in its market. It created a special type of sensor that is integral for self-driving vehicles. Already, Toyota, Volvo, and Audi have deals with this company. In August 2020, the company announced it would go public via a Spac, and you could have purchased shares before it went public in November 2020 for just $10. Then you could have turned right around and sold them only 2 months later for $37 a share. That's a 269% gain in 4 months. Or consider QuantumScape. Again, it would have checked all the boxes that I look for. First, QuantumScape was backed by none other than Bill Gates, the founder of Microsoft. Second, the company addressed a huge market, electric vehicles. We've all seen how hot electric cars have been recently. And third, it developed a completely new solid-state battery that Forbes reported could displace the lithium-ion batteries currently used by companies like Tesla and Chevrolet. Spac shares for QuantumScape traded for less than $10 in August 2020, and you could have sold them in December 2020 for $125, an 1,150% gain in 5 months. And here's one more, AppHarvest. Once more, it would have checked all the boxes I look for. First, the company was backed by many of the biggest names in venture capital. Early Facebook investor Jim Breyer, Impossible Foods founder David Lee, entrepreneur Peter Thiel, and believe it or not, Martha Stewart.
Martha Stewart?
That's right. Her experience as a go-to food and cooking expert was perfect for this company, which brings me to the second box this company checked. Number 2, it addressed a huge new market, vertical farming. This market is projected to reach $12.77 billion by 2026, according to Allied Market Research. And third, AppHarvest operated the largest vertical farm in the world and was transforming the U.S. farming industry with a system that reduces water usage by 90% compared with typical farms. Back in September 2020, you could have bought shares for just $10. By February 2021, those shares were worth $35 a piece. That's a 260% return in 6 months.
That is incredible. And every single day, there are new SPAC opportunities like this?
Every single day. Look, I've been following the IPO industry for my entire career. I've been a portfolio manager and an analyst for decades. Corrina, I've never seen this many opportunities. To be clear, all investing carries risk. Not all these will work out, so never invest more than you can afford to lose. But this is a rare opportunity for Americans from all walks of life. I've shown you some of the best examples I've found looking back, yet very few folks know how to find the best ones to invest in, the ones where you can see the type of return potential I've shown you today.
Okay, with that in mind, what is your number 1 SPAC recommendation right now?
Corrina, this is a big one. I'm recommending people buy a Spac that could merge with a genetics company in the coming weeks. But this isn't a normal Spac. It's funded by the guy who started this revolution in the first place, billionaire and founder of Virgin Galactic, Sir Richard Branson. He says this genetics company is absolutely transforming drug discovery, and the numbers back him up. This company is the first mover and market leader in the field of genetic testing. It has 8 million separate individual genomes sequenced. To put that into perspective, that's 5 times more than any other major competitor. The Wall Street Journal reports it's the largest repository of human genetic information in the world. That means this company has more genetic data than any other company out there. It's like Google back in the 2000s. Before search engines, the internet was a random mass of websites. Google saw this issue and gave people the tools to find exactly what they were looking for immediately. And once Google hit critical mass, nobody could catch up. This company is doing the same thing that Google did, but with personalized medicine. This type of technology searches your personal genome and shows you exactly what diseases you'll likely have in the future. For example, It'll tell you how to predict Alzheimer's before it occurs, and it can help determine your risk for certain types of cancer. Richard Weinschelbaum, a professor of medicine and of pharmacology at the Mayo Clinic, says, now we can scan across the whole genome and we find all kinds of genes that play a role in variation in drug response that we would have never imagined. Keith Stewart, who runs the Center for Individualized Medicine, also at the Mayo Clinic, says this personalized medicine technology is transformative, a paradigm shift. And Business Insider says it's the future of healthcare. Corrina, we're just scratching the surface of this market. The personalized medicine market size is expected to reach $3 trillion by 2025. And this single company is by far the market leader. The Wall Street Journal reports that it has a pipeline of more than 30 therapeutic programs spanning oncology, respiratory, cardiovascular, and other diseases. While Fortune magazine reports that this company aims to kickstart a personalized healthcare revolution.
And this pre-IPO opportunity has everything you're looking for, Andy?
Right. It's backed by Richard Branson, whose previous Spac returned 400% in 1 year. It's addressing the simply enormous, potentially $3 trillion personalized medicine market, and it's one of the very first movers in genetic treatments. Anyone can buy shares today for around $10. But to be very clear, there's serious urgency right now to get in. The company could go public in the coming weeks, if not days. That's why I've put together a full rundown of the opportunity in a new report, my #1 Spac IPO. In it, I lay out everything I've uncovered through my in-depth investigation into this company. I'll give you the exact instructions on how to buy this Spac in a regular brokerage account.
It sounds great, Andy. In a minute, I'm going to share with you how to get Andy's special investigation into his #1 Spac. But first, Andy, are there other opportunities that you're looking at right now?
Yes, there are, in fact. There are 3 I'm very excited about. The first company is in the massive electric vehicle space. It's introduced an all-electric sedan with a 400-mile range, a top speed of more than 200 miles per hour, and a 0 to 60 mile per hour time of less than 2.5 seconds.
Ooh,
yeah,
fast.
right? And demand for this first production vehicle is through the roof. It's sold out all of its $170,000 vehicles, with reservations topping 8,000. The company forecasts deliveries of 20,000 vehicles in 2022, generating sales of $2.2 billion. After that, it expects sales to double to $5.5 billion in 2023, then to almost double again to $9.9 billion in 2024. I believe the company will soon be a major rival to Tesla. In fact, the company's CEO is the former vice president of engineering at Tesla. He's famous for his work as the chief engineer on the Tesla Model S, and this is his second act.
Wow, so he's got some experience, that's for sure.
Corrina, I believe this will be like investing in Tesla back before it went public in 2010.
All right, well, that one surely sounds great. What's the next one, Andy?
The second one is a new tech company focused on the booming cryptocurrency market. Obviously, this is one of the fastest growing markets, so it's a great place to be. And this company is addressing a huge missing link in taking crypto mainstream.
What is that?
It's created the very first fully federally regulated cryptocurrency exchange, including futures and options. Its single purpose is to take cryptocurrencies mainstream by giving institutional investors a stable, liquid exchange. Fortune magazine reports that it will give institutional investors a secure, well-monitored place to trade Bitcoin, the world's most widely used cryptocurrency. That in turn could help alleviate the problems with volatility and trustworthiness that have kept Bitcoin from being widely adopted, giving the asset a major boost in legitimacy. So it's set out to make cryptocurrency as stable as the stock market, and it has the power to do it. This company is backed by none other than the New York Stock Exchange.
Yeah, that's huge.
No doubt. The Wall Street Journal says that this company could make it easier for merchants to protect themselves from swings in Bitcoin prices. And Berkshire Hathaway's Business Wire says it's at the forefront of new innovations enabling institutions and consumers to buy, sell, store, and spend digital assets, meaning it could be the missing link that takes Bitcoin mainstream.
So it has the ultimate first mover advantage.
Right, and I'll show everyone today how to get shares of this private company before it goes public through a special Spac.
Okay, so I'm very impressed with the first two, but what about the third?
The third one, you're gonna like this one, is a big one. It's backed by arguably the most successful Spac backers in the market, Social Capital. This firm backed Opendoor, where Spac investors could have seen a 216% gain in 9 months' time. It also backed the Virgin Galactic Spac, which, as I've mentioned, returned 400% in 1 year. This new Spac could offer similar potential. The company is a leader in the fintech industry. You know how Amazon is a one-stop shop for consumer products?
Right.
Well, this company's goal is to become a one-stop shop for financial services, from personal and home loans to small business financing to crypto and stock investments. So its goal is to become an integral part of its customers' lives, and it could upend the entire financial industry.
These three SPACs sound every bit as good as the ones that have turned into big winners in the past. So everyone who joins your new initiative today will also get your full analysis on these companies.
That's right. I put together a report detailing everything our audience needs to know to profit. It's all in my brand new report, 3 SPACs to Ride the $300 billion IPO Wave. And I'm giving everyone who's watching today the chance to get the full details on these 3 SPACs and my #1 Spac IPO for free when they join my new early stage tech research service. My goal with this new service is simple. I want to show ordinary Americans how to make extraordinary profits in pre-IPO and early stage tech companies. And I'm bringing in a small number of people today to join me as we go after the biggest wins in the market.
All right, you heard it here first, folks. Andy is inviting a few people in to target the most exciting pre-IPO opportunities in the markets. Now, let's be crystal clear here. This service is one of a kind. It's geared to find special, fast-moving, early-stage opportunities, just like the SPACs we've seen today. This is essentially a direct line to one of the most connected people in finance. Andy has a history of success as a money manager, an early-stage trends expert, and a stock market analyst. His influence gives him insider knowledge about early-stage technologies, from electric vehicles and artificial intelligence to breaking-edge cryptocurrencies. And when something new hits the scene, Andy hears about it long before anyone else. His specialty is finding small, under-the-radar companies that are about to strike it big. For example, Andy found NEO in 2020 at $3 a share before the most clued-in tech investors knew it existed, and publicly called it a rival to Tesla. Less than a year later, listen to this, it peaked at more than $50. And he found Novavax when it traded for $7 a share in February of 2020. It traded as high as $150. Today, he's told you about some incredible early-stage tech companies that you can get into before the companies go public.
The 4 companies I've talked about today are small, fast-moving companies that I'm certain will become big players. But please understand this, these are just the start. I see a whole lot more coming down the pike than just what we discussed today. Remember, I'm expecting 700 new SPACs in the year ahead. I want to show my readers how to cash in on as many of the hundreds of upcoming $10 Spac deals as possible. This year alone, I believe we'll see multiple chances to bank 500% and even 1,000% profits.
Okay, with that said, Andy, can you explain how your new Venture Fortunes initiative is going to work?
Sure thing, Corrina. What I'm going to do with this research service is scan the markets every week, looking for SPACs that are merging with innovative tech companies. Remember, I'm looking for companies that have quality backers and management. I want to see that the company is addressing a huge market. And I want to see that the company is a first mover in that market with an innovative technology. And when my analysis tells me that it has the kind of big money potential we're looking for, I'll send members a Venture Fortune alert. This will be an email detailing everything about the SPAC, showing my readers exactly how to get in for maximum gains. Inside, I'll detail the company name and the exact ticker symbol. Then I'll break it down with simple step-by-step instructions. Now, these SPACs are traded on all the major trading platforms, so there's nothing to learn that's new here. Of course, you'll have all my research and analysis behind a trade before you make your decision. You can see exactly why I like the company. I'll break down the quality of the management. I'll give you insights into the company's technology, and I'll include a full analysis of the company's financial situation. I've told you about a total of 4 SPACs that are ready right now, including my #1 Spac IPO. And I'm looking to make at least 24 Spac recommendations over the next year. With the kind of explosive growth we're seeing in SPACs right now, I anticipate that we could see more new opportunities this year than we've ever seen before. Because look, SPACs are growing faster today than at any other time in history. We'll likely blow past $300 billion by the end of the year.
Wow, that is a lot of cash for the taking.
Exactly. That's why I want to give charter members of Venture Fortunes the tools to capture as much profit as possible, starting with a third bonus that I think is really exciting. As we've seen today, SPACs offer incredible potential on their own, but I found a way to increase your gains exponentially using what are called warrants. Warrants can increase your returns by up to 10 times, and you can put less money down since most warrants trade for less than $2.
They sound like options.
Warrants are similar. The key difference is that warrants are publicly traded like a stock. They're far easier to buy because they can be traded in a basic brokerage account. Unlike options, you don't need special permission to trade warrants. And just one winner can be a total game changer. Consider DraftKings. Between December 2019 and March 2021, the regular $10 Spac would have returned 700%. But DraftKings also had warrants available during its pre-IPO phase. So in addition to the regular Spac, you could have bought warrants that would have cost you just $1.50 a share in December 2019. So for $5,000, you could have bought 3,333 warrants. By March 2021, that $5,000 investment would have been worth $166,000.
My, that is a huge amount of money.
Right, it's a 3,233% windfall in just 15 months. Danimer Scientific was another big one. You could have bought $5,000 worth of Danimer Scientific warrants in November 2020, and by February 2021, you could have banked $120,000 in profits. That's a 2,300% return in 4 months. And Corrina, sometimes you have a rare chance at life-changing gains with these warrants. Take a look at Tattooed Chef. It IPO'd through a Spac in 2020. Had you invested $5,000 in its warrants in May 2020, you could have seen $393,000 in gains. That's an extraordinary 7,861% gain in 8 months.
Wow, these are truly incredible, Andy.
They are, but to be very clear, these are rare gains, and warrants do carry more risk than the SPACs alone. Remember, SPACs give you your money back if the merger isn't completed. Warrants do not, so you should never invest more than you can afford to lose. But warrants also offer much bigger upside, so that's the trade-off. More risk, but more upside. So when possible, alongside our regular Spac recommendation, I will be giving members a recommendation on a warrant that can take gains even higher.
So with Venture Fortunes, not only will you show people how to get into the right SPACs, but you'll also show them how to potentially increase their returns with Spac warrants as well. So Andy, that sounds great, but I do have a question about these warrants. Those are truly extraordinary returns. So I'm really surprised that I haven't heard a whole lot about them in the financial media. So can ordinary investors really buy them?
Anyone with an ordinary brokerage account can buy these warrants. However, few people know how to find them. That's why I've created a special report on warrants called How to 10x Your Gains with Spac Warrants. Inside, I'll reveal exactly how they work, how to find these warrants, and what types of Spac warrants I like to target, the best way to play them, and everything else you could need. So anybody can take advantage of these special trades. Inside the report, I'm also giving everyone a special bonus, my top 5 Spac warrant recommendations. I showed you earlier how just one top performing warrant could have turned $5,000 into $120,000 in just 4 months. So imagine what 5 could do. These trades are small and fast moving, so I'll immediately send new members specific instructions on how to play these trades today. Everyone will receive them within minutes of joining Venture Fortunes.
Amazing. Between your number 1 Spac IPO, your top 3 additional Spac recommendations, and these 5 warrants, your readers have the chance to begin profiting from Spacs as soon as possible. In total then, as a new member of Venture Fortunes, you will get 1 year of top Spac research and recommendations. Andy Snyder's number 1 Spac IPO. How to 10x your gains with Spac warrants, including the 5 warrant recommendations. 3 Spacs to ride the $300 billion IPO wave, with details on Andy's 3 favorite Spacs to buy right now. It's an incredible package. And I have to say, based on the profit potential of all the Spacs we've looked at today, this is going to be a huge value.
I'm not exaggerating when I say I waited years to be able to run a research service like this. But this is the first time we've been able to recommend pre-IPO opportunities like this to my readers. They have profit potential beyond anything else out there right now. So to be able to share my very best plays is going to be special. But I should mention, this will have to remain small.
Right, these companies are still small, so I imagine you can't just give everyone access.
No, that would be counterproductive. If I had too many people piling into each opportunity, that could water down the profit potential. So I'll be very upfront and say that only a small number of our viewers today are going to get in. That's the only way it will work. It's not fair, but that's the reality. We just can't let everyone in today. In fact, we can't even let in 500 people. It would dilute the opportunity too much. I can only allow 150 people to access my Venture Fortunes research service today on a first-come, first-served basis. That's the biggest number we can bring in and still guarantee the maximum profit opportunity.
I can understand that. There's just no other way to target startups this small. So membership is going to be extremely limited and spaces are going to go very fast. But here's the thing. I bet folks would rather get recommendations like your number 1 Spac IPO today before they miss the boat. So Andy, everyone's wondering, how much is this going to cost to join? I imagine it's not going to be cheap.
You're right. It's incredibly time-consuming and expensive to research these private companies.
Why is that?
Well, as I've said, Wall Street doesn't cover many of these private companies, and getting financial details on them can be difficult. You can't just look them all up on the Bloomberg terminal like you can with public stocks like Apple or Microsoft. For many of them, the financial data isn't always available through regular research services. As a result, you have to dig much deeper. But that's where my advantage lies. We spend millions of dollars every year just on our staff and research data. I have an entire team of people looking for Spac opportunities that match my criteria. And that's when the work really starts. Since these are smaller companies, I can get far closer and far more personal. With my contacts in the industry, I can call up a company's chief financial officer and get the scoop on its financials. I can tour a company's facilities, even test out its products firsthand. It's worth it because it leads me to incredible Spacs you can't find through normal channels.
Well, it makes sense that not everyone may be able to afford a subscription to your research service. That's just the way it is. I know you normally charge something like $5,000 a year. Of course, even at that price, these pre-IPO opportunities could pay off the subscription cost in a very short period. Considering how you just showed us how $5,000 invested in Danimer Scientific, it would have paid out $120,000 in 4 months. But here's the thing, Andy, I know you wanted to do something very special for your viewers today.
Absolutely. This is my newest service. And as I said, I want to make sure my readers get the chance to make huge money. Instead of spending $5,000, I want them to be able to take a portion of that and use it to grow their wealth. So I'm doing something very special indeed. Instead of the full $5,000 retail price, the 150 charter members who join through this special offer today can get in for just $1,975. That's more than 60% off the full price. That's the very best deal I could possibly offer.
Now, even though this deal is so good, Andy, you're not going to stop there. You're going to make it even better. That's what you do.
Corrina, this is the first time I've ever been able to give regular Americans a chance to invest in private companies, companies that could become the next stock market winners. So I want to make sure everyone has plenty of time to profit. That's why I'm willing to make a special offer for charter members today. As I said before, 1 year of my service will retail at $5,000. But since this is a brand new service, I'm giving an extra year free to anyone who signs up today. So charter members will actually get 2 years total.
That is incredible. You told me you have a special guarantee for charter members to make the choice even easier?
Yes, I do. Today I'm promising right here and now to deliver 5 triple-digit gain opportunities over the next year per my track record. From the profits I'm seeing with Spacs, I think we should be able to blow past that goal. We could hit 1 or 2 triple-digit winners a month. But if I don't hit at least 5 in the first year, I'm going to give them a full refund of their subscription. All they have to do is call us up, and I will give them 100% of their money back.
Well, that's great, Andy. Well, folks, this is it. We're going to go ahead and open up the service to new charter members right now. Just click on the button that popped up below on your screen. It says, "Yes, I want to join Venture Fortunes." I'm certain you'll be thrilled with Andy's new Venture Fortunes service. Remember, Andy is giving out a free year to only 150 people today. So don't waste a minute, because the risk of missing out is real, and any delay could, of course, cost you. We are talking about getting in on the ground floor of some of the hottest early-stage tech companies in the market. You've seen how incredible the potential returns can be. QuantumScape, 1,150% in 5 months. Danimer Scientific, 2,533% in 4 months. DraftKings, 3,233% in 15 months. This is your chance to seize pre-IPO opportunities like these. Just click on the button that popped up below on your screen. It says, "Yes, I want to join Venture Fortunes." Or, if you'd prefer, you can call right away. You can reach us at 844-201-1980 or 443-541-4636. These spots are going to go fast. With an amazing 100% money-back guarantee and a price almost too good to be true, there is little time to waste. So go ahead and claim that spot right now by clicking "Yes, I want to join Venture Fortunes" below. Clicking doesn't obligate you to do anything. It just takes you to a secure page where you can review everything laid out in a clear, concise manner. Or you can call Andy's team in Maryland at 844-201-1980 or 443-541-4636. Andy, I can't thank you enough for sharing this with us today.
Corrina, it's been fun. I'm excited to share this new way to make incredible returns in the market with folks. I'm looking forward to getting started.
And thank you all for joining us today. Remember, just click that button below to claim your spot as one of the 150 charter members to Andy Snyder's Venture Fortunes.